guys, we are now on to step 7, which means part C, my answer. I'm going to really struggle to deliver this in a short video, but I shall do my very best. Certainly, easy is not a word that works with this scenario, but hopefully I will be able to make this small mini scenario, part C, a little easier. Here we go. At the 1st of April 2009, now our current year end is the 31st of May 2010, so our current year start was the 1st of June 2009. So the year start is the 1st of June 2009, and we've already got this freaky date of the 1st of April 2009, which is 2 months before the year start. Bit of a freaky date, but there you go. 2 months before the year start, Kate had a direct holding of shares giving 70% of the voting rights in date. Just stop there for a second. 70% of the voting rights, that would give us the power to direct activities. It would give us control, and therefore this entity, Date, is our subsidiary, and Kate is the parent, and we would consolidate. In May 2010, our year end, remember, is the 31st of May 2010. It's a little unfortunate we're not given the exact date in May, but let's say somewhere in the middle of May. In the middle of May 2010, Date issued new shares which were wholly subscribed for by a new investor. Now, why would Date issue shares? The answer is the only reason Date would issue shares is because Kate told Date to do it. Because we are Kate and we have control. Date would not do anything without us telling them to, because we have control. So we have told Date to go and issue shares. And we've also said, no thanks, I don't want them myself. In May 2010, Date issued new shares, which were wholly subscribed for by a new investor. Now, I guess that new investor would now have 35%. I do apologise, I've got ahead of myself. After the increase in capital, Kate retained an interest of 35% of the voting rights in its former subsidiary. Now, 35% is a bit of an awkward figure because it means we gave away 35%. So we still have 35% and the new investor has 35%. But what has happened to our control? Well, our ownership has dropped from 70% down to 35%, but that's just ownership. Have we lost control? Absolutely. We've gone from having control, the power to direct activities, to apparently influence, the power to participate. Apparently, that's what it looks like first of all. At the same time, the new shareholders in Date signed an agreement. Now this is tricky, this. I don't know how you're going to interpret this, but here we go. At the same time, the shareholders of Date signed an agreement providing new governance rules for Date. Based on the new agreement, Kate was no longer to be represented on Date's board or participate in its management. Now, do you remember the definition of influence was the power to participate? Now, 35% would normally give you the power to participate. But what Graham is saying, that even though we have a huge chunk of ownership, we've actually given up our place on the board and we've given up our power to participate. We used to have control, here's influence, but we've fallen all the way down to no relationship at all. Instead of having what we had before, which is a subsidiary, we don't even have an associate. We've dropped down to having a plain investment. Tricky that, isn't it? As a consequence, Kate considered its decision not to subscribe in the new shares was equivalent to a decision to disinvest in Date. It's a massive hint, that. I don't know why the examiner gives a massive hint. He's used a funny word to drop a massive hint. Of course, disinvest means disposal, and it is a disposal. We used to have control of a subsidiary. We've now lost control of a subsidiary. Therefore, we have a subsidiary disposal. How much control have we lost? We have completely lost control. We used to have control, absolutely, and now we don't have it at all. So it's a sub-disposal. Kate argued the decision not to invest clearly showed its new intention not to recover the investment in date principally through continued use of the assets, and was considering selling the investment. And that'll be useful later, considering selling the investment. Due to the fact that date is a separate line of business. Now, do you remember that Kate is in the software industry? Well, apparently date is in another industry, let's say dates. Let's say it has palm dates. I love dates, they're delicious things. Let's imagine dates, that's quite cute. So we are doing software and they are farming for dates, module dates. Kate considered the results of date should be presented in accordance with IFRS 5 non-current assets held for sale and discontinued operations. Absolutely, here we go. Let's see how I get on. So here's my answer. Let me see if I can whiz through this within a few minutes. Control. IFRS make it very clear that sub is defined by control. Sub-acquisition occurs when we get control, and sub-disposal happens when we lose control, and that's under IFRS 3. Disposal. So when Kate tells date to issue the shares to a new investor, and the Kate ownership and voting falls to 35%, then Kate loses control and the result is a sub-disposal. And now you can bring in the discontinued anywhere, but I'm going to bring it in here. Discontinued. The scenario tells us that date is in a separate line of business. I made up module dates, didn't I? Obviously, we've stopped doing that separate line of business towards the end of the year, so the operation is discontinued. We used to do software and dates, and now we just do software. So we've stopped doing dates. Income statement. Kate time apportions date and then puts the profit after tax into discontinued at the bottom of the income statement and only discloses the details in the notes. So it's roughly 11.5 months of the year because the disposal happens just before the year end. So we time apportion the date income statement, take the profit after tax and stick it in discontinued operations at the bottom of the income statement, and profit on disposal. IFRS also make it clear that when we lose control, we are deemed to have sold the whole sub and bought back another investment. The result is as follows. Now, the actual sale proceeds are for actually selling the 35% that we did sell. But the 35% that we did sell lost us control. What we used to have was a 70% subsidiary, and now we don't have a subsidiary at all. So we're deemed to have sold the 35% we didn't sell. We're deemed to have sold the 35% we did sell and the 35% we didn't sell. We're deemed to have lost control of the whole subsidiary. So you get two sale proceeds, the actual sale proceeds and the deemed sale proceeds. What we're deemed to have done is we're deemed to have sold a subsidiary and bought back an investment. So that gives the result of the disposal calculation that you see on my left-hand side. The remaining investment, the story tells us that Kate have lost their place on the board. So it's possible that Kate retains no influence. That's my suggestion anyway. You could argue other things. If this is true, then the remaining asset is a simple investment at fair value with no gains to the income statement. Now getting into some really sophisticated financial reporting, and if you can keep up with this, you're doing extremely well. Financial assets. This simple investment is equity, so must be classified either as fair value through the profit or loss, or fair value through other comprehensive income. Now, you always abbreviate those two because they're huge. Fair value through the OC only applies with equity with intent to keep. So if you have equity with intent to keep, it would be FVTOC. However, but the question describes the directors as considering selling the remaining 35%, so I suggest FVTPL. Wow, now that really was quite a challenging part C. Have a look at this video a few times so that you can see what I'm doing there, but basically there's all hell breaking loose in part C, and what you're trying to do is just get as many ideas as you can and get them in. It's very unlikely you'll be able to put everything into your answer within the short time that you have in the exam, but it is possible that using heading sentence, and bit of knowledge, bit of application, bit of knowledge, bit of application, you'd be able to come up with a reasonable answer that would score 5 or 6 out of 8.